If there is one thing in common with the majority of self-made billionaires, it's this. They read nonstop.
I read everything that I could get my hands on.
I probably read 3, 4, 5 hours a day.
I just read and read and read. I probably read 5 to 6 hours a day. I don't read as fast now as when I was younger, but I read 5 daily newspapers. I read a fair number of magazines. I read 10Ks. I read annual reports.
Warren Buffett reads so much that he once joked that his kids must think that he's a book with 2 legs sticking out of it. Now, he's definitely an exception. In his heyday, Buffett said he would read 500 pages of annual reports per day. If you can top that, I'll put my money on you becoming wealthier than anyone you know. Obviously, this doesn't count if you're just speed reading. You have to actually interpret what you're reading. I, although not nearly as wealthy as Buffett and the other people in this video, am also a voracious reader. We decided to make this video because a couple of you asked in our comment sections to see what investing books have meant the most to me throughout the years. And as I was going through my bookshelves, Audible, and Kindle history, I was honestly surprised by how many investing books I've read throughout the years. And some of them have completely changed my investing and business life, while others, not so much. They were kind of a waste of time. In this video, we'll cover the absolute best books I've read in investing, and we'll break it out by category. We'll first talk about the best books I'd recommend for beginners, the best business memoirs, which sometimes are better than how-tos in my opinion, general memoirs from investors, some economic books, Buffett's favorite books, and then finally my absolute favorite books for intermediate and advanced investors. Make sure you stick around until the end where I'll give my top 3 most hated investing books I've read. But first, it's been a busy week in the market. Roaring Kitty himself is back, and the idea for flank investing was actually born from the GameStop phenomenon. So it seems fitting that as we're picking up steam, GameStop is also having a revival. Here's what this shows to me. The peak animal spirits are returning. I have to say at the top, please make sure that if you are considering taking a position in GameStop, you recognize that it is a gamble. And gambling is not a sustainable way to make money in the long run. It can be entertaining, which there's nothing wrong with that. But what it tells us as intelligent investors is that the speculative nature of the market is coming roaring back, pun intended. And I implore you to fight the FOMO. This level of irrational exuberance is exactly what precedes a market correction. If you've been following us for a while, you know that I am not in the business of predicting when a correction will happen. But I've been doing this long enough to know the symptoms. What this tells me is that the market is frothy and getting frothier. And I can back this claim up with numbers. My absolute favorite valuation metric for where we're at in a market cycle isn't the Shiller PE ratio. It's not the fear or greed indicator. And it's definitely not the worse than reading tea leaves yield indicator. Don't get me started on that one, please. But it's the Buffett indicator. I love the Buffett indicator because it's perfectly simple and incredibly robust. To calculate the Buffett indicator, you simply take the US stock market total value and then divide it by the annualized GDP. According to Buffett himself, if the percentage relationship falls to the 70 or 80% range, buying stocks is likely to work very well for you. However, if that ratio approaches 200%, you are playing with fire. That is a direct quote from him from a Fortune magazine article. And as this chart shows, we're getting dangerously close to that 200% mark. We're currently sitting at 197%. And this explains why I'm having a hard time finding stocks right now. I'm not trying to time the market, but I also can't really find anything that's trading within fair value in my opinion. To show this, I have a public portfolio where I'm investing $100,000 of my own money. And I'm voting with my dollars here. I'm currently sitting at 60% or $60,000 in cash equivalents, aka short-term bonds. These bonds, which I've chosen to use the ticker SGOV, pay me 5% per year with virtually no risk. This 5% yield helps me fight inflation while I wait patiently for my favorite companies to go on discount, aka a market correction. Instead of gambling right now, you could use this frothy period to learn like crazy. Concentrate the FOMO you feel, and don't worry, I also feel it. It's completely normal, but we will do better if we don't give into it. But concentrate that sense of FOMO so you can learn as much as you can so that you're able to flank the herd.
Did you really just say flank the herd?
That's cheesy, but we mean it. All right, let's talk about books. Here are my top 3 favorite books if you're brand new to investing. Starting off with Rule Number 1 Investing by Phil Towns. This book is really, really basic, sometimes to the point of oversimplification, but it's a really great place to get started. It's probably the best distillation of Buffett-style investing into an actionable framework that I've seen. In fact, Rule Number 1 Investing could be considered the progenitor to the 5 steps that we recommend as part of the Flank Investing framework. We've adjusted it and made it our own, but you'll definitely see some similarities. It's a really great book if you're starting off day one. The second book I recommend if you're brand new to investing is The Hondo Investor by Monish Pabrai. This book formed my early beliefs on risk, which is one of the most important things in investing. Buffett says, rule number 1 in investing is to not lose money, and rule number 2 is to not forget rule number 1. And risk awareness is your best way to make sure you don't lose money. The whole book can kind of be boiled down to this idea. Heads, I win. Tails, I don't lose much. And I've taken this idea in my own portfolio. It's why I don't do options. If your portfolio loses 50% of its value, then you need to double that to get back to your starting point. That's why I only take long positions in companies. It is very possible to lose 50% of your portfolio value if you're playing in options land. Whereas the probability of Apple losing 50% of its value is pretty low. It's not zero, but it is pretty low. Okay, probably my absolute favorite beginner book on investing would be One Up on Wall Street by Peter Lynch. Peter Lynch is one of the greatest portfolio managers of all time. During his years active, he returned something like 20,000%. I actually didn't read this book until I had already been investing for a few years. And I kept putting it off because I heard that it's really basic. But I'll be completely honest, I love this book. As I was looking through my notes, I'm honestly considering rereading this book. It's that good. One of the ways I judge how good content is how often I find myself repeating it in day-to-day conversation. And I bring up this book all the time. Some of the key takeaways that Lynch recommends is that investors should put their money into firms they know and understand. Individual investors, according to Peter Lynch, actually have an advantage over institutional investors because they have personal knowledge and experience that may assist them in discovering hidden investing possibilities. And this makes sense if you think about it. The average hedge fund manager is living in New York City, pretty disconnected from middle America. We are more in touch with what's going on in the culture, and we should use that to our advantage. As an honorable mention in our beginner section, I wanted to include Joel Greenblatt's The Little Book That Beats the Market. It's a really good book, and you could read it in a weekend. Okay, let's move on to business memoirs. I said in the intro that I really like business memoirs to help me learn how to invest. If you've been following this channel for a while, then you know that we are all about fundamental Buffett-style investing, focused solely on the long term. And that means we don't just view stocks as a piece of paper that we just trade around. We view purchasing a stock as buying the whole business. So, business memoirs can be just as important to learning the alchemy of what made these companies great. Starting off with The Everything Store by Brad Stone. This book covers the origin story of Amazon, and it shows the blueprint on how Bezos thought he could build his e-commerce empire. Second on the list, Ride of a Lifetime by Bob Iger. This shows what it takes to be a Disney CEO and how someone thinks about running that company. He uses the idea that as CEO of Disney, his job is to manufacture fun. And when you think about that, it helps you think how the business is running in general. If you've been following our public portfolio, you know that 10% of that $100K that I'm investing in is in Disney. I do believe in the long-term prospects of that company, especially as their streaming segment becomes more profitable. And this book showed me that I really do respect Mr. Iger as an operator, so I'm happy to see him in there. Moving up the list, we have Let My People Go Surfing by Yvon Chouinard. He's the founder and former CEO of Patagonia. And what I really like about this book is it shows the idea of impact investing. Yvon is what we would call a reluctant billionaire. He went so far as to donate his stake in Patagonia as part of a climate pledge, which is really cool to see. And this book helped me rethink the idea of impact investing. Basically, not just treating investing or really business as purely to make money, but also to help us shape the world that we want to live in. I really enjoyed this book and highly recommend it. It is a wonderful beach book. These next two up the list honestly don't really require much explanation. It's Elon Musk and Steve Jobs, both by Walter Isaacson. These books cover two of the most important people in the tech world, and I'm mostly a tech investor. So it's really great to see what it takes to make a great tech founder and CEO. Moving up, Shoe Dog by Phil Knight, the founder and former CEO of Nike. I like this book because it shows the journey that Phil went on from just a running enthusiast and footwear fan to creating one of the most iconic brands in the history of mankind. It's a fascinating story, and I really do recommend it. Again, a great one for the beach. And then, weirdly enough, my favorite business memoir of all time is Pour Your Heart Into It by Howard Schultz. I'm honestly not sure why I loved this book so much. It just really resonated with me. It could have been the time in my life that I read it, but I have recommended it to other people who have also really enjoyed it. You just never really see it pop up on any other list, so I feel weird recommending it. But some of the main reasons why I like this book was because Howard Schultz talks about traveling to Italy, seeing how they had coffee shops as third places, and wishing the US had something similar. This is back in the day when most Americans were drinking Folgers. And so he made it happen. And I think that's one of the cool things about business is it can help us create the world that we want to live in. Let's move on to some of the general memoirs of investors. I know I'm throwing a lot of books at you, but you asked for it. Starting off with Reminiscence of a Stock Market Operator by Edwin Lefebvre. I'm not sure how to say that. Any French speakers in the audience, please let me know. Honestly, as far as learning more about investing, this book was kind of mid. It's more of a history book, but it's really fun to take that time machine back to 19th century Wall Street. And it goes back to the idea of bucket shops. If you're not familiar with what a bucket shop is, it's basically an illegal brokerage. Okay, coming up next on the list, The Education of a Value Investor by Guy Spear. This book changed my life. It's very high on my list. I got into investing in college, and I was pretty sure that one day I'd move to Wall Street and follow a traditional finance path. This autobiography by Guy Spear, who is Harvard and Oxford educated, moved to Manhattan and tried to become Gordon Gekko, like from the movie Wall Street. But he ultimately realized that his love for investing was more of a Buffett-style approach. And he was able to become a better investor by moving away from the noise. He moved to Switzerland and to focus on the fundamentals. It's a fantastic book, and it's beautifully written. I would recommend this at all stages of investing, whether you're a beginner or advanced. But it's actually not my favorite investing book of all time. My favorite investing book is actually two books by the same author. I couldn't pick which one's my favorite. But that's Investment Biker and Adventure Capitalist by Jim Rogers. Holy crap, I love these books. Jim Rogers is a pretty famous investor who launched the Quantum Fund with George Soros back in the 70s. Although him and Soros separated ways, Jim Rogers would still go on to become a legendary investor in his own right. In Investment Biker, he travels all around the world on a motorcycle in, I think, 1989. And it's just cool to see how he views the world back then. And he kind of makes predictions on where he thinks these markets are going based on the history of the country he's in, but then also what he's seeing around him. He did another amazing trip in the 2000s, but he did it in a custom-made vehicle. And he wrote a book called Adventure Capitalist. And it was basically the same idea. It was a continuation on. As I was reading these books, I was planning my own trip around the world on motorcycle. I ultimately was able to take that trip, which is why I love investing. I had a pretty regular job, but because I had saved and invested so diligently for most of my early career, I had enough money where I could take a gap year. My own trip wasn't around the world. I ended up launching in March of 2020, probably the worst time in the past 100 years to do a trip like that. But I still did get to explore most of the US. All right, that's enough on memoirs. Let's move on to economic books. Starting off the list, Pragmatic Capitalism by Cullen Roach. I honestly don't remember a lot about this book, other than I really liked it, and I've been following Cullen Roach for years. Myself and other Buffett-style practitioners are bottom-up investors, whereas Cullen is a top-down investor. He looks at the market as a whole. I don't recommend, unless you're a professional, taking this approach because you don't really have an edge over Wall Street in this approach. However, he does run a blog called pragcap.com if you want to keep an eye on the macroeconomic environment. My second favorite economics book that I've read is The Price of Peace by Zach Carter. This book covers the life and legacy of John Maynard Keynes, who is an absolutely fascinating figure and probably the most important economic mind of the 20th century. It helped me understand his principles at a deeper level than just what high school econ taught me. And it changed the way that I view the macroeconomic environment, specifically government spending. And then finally, my favorite econ book that I've read is The Better Nature of Our Angels by Steven Pinker. The purpose of this book and what it taught me could be distilled down to one word, and that word is optimism. And this is a bit of a hot take, but I actually think that optimism is Warren Buffett's most overlooked investment philosophy. If you go back and listen to Berkshire Hathaway's annual shareholder meetings and the letters throughout the years, there is one thing that remains constant. Buffett is always incredibly optimistic on the long term. The book itself does get a little bit redundant, but it really does show that things aren't as bad as they seem, and that basically every bad statistic is going down, especially in the long term, but he does make a point to point out that it also is occurring in the midterm. Mr. Pinker isn't blind to the idea that we don't really feel this in our day-to-day. Progress is a bumpy road. And just a little bit more enticing, Bill Gates called it the most important book that he's ever read. Speaking of Buffett, here are the books that the man himself actually recommend. All right, let's talk about The Intelligent Investor. I guarantee if you go onto YouTube or TikTok and look at best investing books, of course I did it for the research of this video, but most people on there will talk about this book. I would wager a significant amount of money that they've never read it. It's a beast. Not as bad as Security Analysis, also by Benjamin Graham, but pretty darn close. And I have a degree in mechanical engineering, so I like numbers. The book was written in the 1940s, so it's hard as someone living in 2024 to keep up with the lingo. And Professor Graham doesn't do a good job of using the same terms for the same thing. So if you want to pick up that book, you can do what Mr. Buffett says.
You know, I obviously recommend first and foremost The Intelligent Investor, with chapters 8 and 20 are the ones that you really should read. All of the important ideas in investing really are in that book, because there's only about 3 ideas, and those two of them are emphasized in those 2 chapters.
All right, another one of Buffett's most recommended books, Common Stocks and Uncommon Profits by Phil Fisher. Where I think a lot of beginner investors will struggle with The Intelligent Investor, I actually think that this book is approachable at all skill levels. It was written, I think, in the 50s, so the tempo and language don't really match what we're used to seeing in 2024, but this one is pretty approachable, and I do recommend it. Okay, on to the intermediate ones, and this one is a great transition if you're a beginner becoming an intermediate investor, and that is Warren Buffett and the Interpretation of Financial Statements by Mary Buffett. I love this book. They basically walk through every line item of the 3 financial statements, the income sheet, balance sheet, and cash flow statement, and tell you exactly what Buffett looks for when he's evaluating a company. I found this book on my own, but I loved it and could not recommend it enough. If you've been following this channel for any period of time, you knew this one was coming. My second and probably my most recommended book, if you're an intermediate investor, are the annual shareholder letters. There's so much wisdom packed into these letters, and the cool thing about them is you're getting the yearly installments of them. These are part of Berkshire Hathaway's reporting. And so you can see how Buffett is thinking and reacting to the things that are happening to him real time, going back to 1965. I truly cannot express how much the letters have changed and shaped the way that I invest. It's easily the most impactful thing. Going through the letters can be a little daunting. During the pandemic, I actually started to reread the letters, and I would take each year, so starting at 1965, and I would write out what was happening in the world at that time, and then read the letters line by line and made some comments. If anyone's interested in our Discord, we could go through the letters year by year, and we could do it on a weekly basis or something like that. These letters are so incredibly valuable, I am happy to reread them again with the group. Let me know if that's something you'd like to see in the comments below. Or you can drop in our Discord and let me know. Whew, we're almost there. My 2 favorite books, if you're an advanced investor, are Valuation, which is a soup to nuts description of valuing any asset from the consulting company McKinsey. And then Investment Valuation by Professor Damodaran. These 2 books go way deeper in valuation than I think even Buffett himself would recommend. He has a quote where he says, read Graham, read Fisher, read annual reports, but stop at the equations with the Greek letters in them. And these books definitely go into valuation with Greek letters in them. I think McKinsey's book, Valuation, may be a little bit better because it gives you a first principles approach to investing. It kind of boils it down to its bare minimum and then builds on top of it. And I think you can be a little choosy in the chapters you read. I certainly didn't read it cover to cover. Okay, now for just a little bit of a fun section. These are the books that I read that I thought sucked. First off, The Alchemy of Finance by George Soros. This book is 400 pages of nothing, in my opinion. I didn't take away a single thing from it, and I don't know why. I don't think it was a book that I was kind of speed reading or passively reading. I was trying to pay attention, but I literally took nothing away from it. So definitely recommending skipping it. Second on the list of books that I thought sucked were Rich Dad, Poor Dad by Robert Kiyosaki. If you are absolutely green to investing, like don't know the difference between an asset and a liability, then maybe you'll get some value from this book. But I just think that Robert Kiyosaki is such an asshole, and he spits out the worst financial advice of just about any of the talking heads, which is not a proclaimed bunch. And I also think that he intentionally spits out trash advice. I think it's part of his marketing strategy. He says these crazy things, and it gets people to click on it. Just to prove that point, check out this clip.
I am a billionaire in debt. You know why? Because I get tax breaks for borrowing money. And the reason I am so rich is because I'm in debt.
So because of all this bad advice he's giving, and because the book isn't very good, I don't recommend giving that guy any money. And then finally on that list is a pretty famous book called A Random Walk Down Wall Street by Robert Malkiel. This book basically means that you can't beat the market and all stock picking is just random chance. It was one of the first books that introduced the idea of the efficient market hypothesis, which basically believes that all stocks that are trading on the public market are at fair value. The author himself took back those words before he died. I cannot tell you the number of times that I brought up to my friends the idea of investing, especially when I was in college, and they would cite this book to me. It almost prevented me from not getting started in the markets. I'm dead serious here. I'm so glad that I'm headstrong enough that I still continued this journey. Because at this point, not having gotten started investing would have cost me hundreds of thousands of dollars. And as that money that I invested back in 2012 continues to compound, that will be millions of dollars in the future. So that's part of the reason why I hate this book. It's prevented thousands of individual investors from getting started in the market. And I believe that that has exacerbated the wealth gap. Out of the 100 or so investing books I have read throughout the years, those were my favorites. I tried to break them down into categories, and we'll be sure to chapter out this video so you're able to revisit them, but I hope that you found it useful. So if you'd like to continue the conversation, please list your favorite book in the comment section below. And if you want to continue the conversation deeply, consider joining our Discord. There's great conversation happening in there all the time. We'll see you next time.